What's up, guys? Happy Wednesdays. Let's see what's going on with the market today. It's like the market bubble. Oh, snap. This finally popped off. Wow. So I was looking at this trade a while back. I kind of missed it a little bit. They had some really good news, and goddamn. And today was the day they popped off. So this was the company that make the Alzheimer disease drug, and they had just dropped their price by 50% recently, and then and they had dropped a lot too from since they announced that drug. So the stock price was around 269 when they first announced the drug, got approval and everything, came all the way up to 400s, and then you know there was a lot of bad press about them, and it came all the way back down here. So it's a pretty good buying opportunity at the bottom here, I guess. We had support all the way from 224 here, so now we're making a recovery again. Testing. Testing. What's up, Deluxe? How you doing? Jamie? Omar, happy holidays, man. But yeah, that's a pretty good stock. Market outlook for tomorrow? That's a great question. So a lot of things are actually looking kind of weak today. Not much movement. Western Digital had a good move upside. MU finally made the new highs. Microsoft looking weak. Apple is looking weak. UPS is also looking weak. Let's see. So market outlook for tomorrow. I posted the market outlook for earlier this week on Monday. I said that we had a pretty good run. We're looking to finish up that W pattern here, which, as you can see, we're making that move there. Let me see if I can find it. Nice. So you must have made some money from MU then. So this is the market outlook that was posted Monday for this whole week. We're looking at the double bottom pattern playing out, W pattern. I think we're at a point to take profit and stay caution for this week. So we did end up moving a little bit higher from this. Same thing with this, also kind of moving up. So there's not much to say from here, man. I mean, obviously we had a really good recovery from that drop. We had a lot of run. There's not much to go from here. Once you ran that much, there's only so much more that you can go up, you know? So kind of think of it like if you were running on the treadmill and you just had like a really, really quick burst. You know, you're doing HIIT, high intensity interval training, you're on the treadmill, and you just ran a high intensity at like 6 miles per hour for like a good 5 minutes. You're about to take that break because there's no way you can keep going on, you know, or maybe not even 6 mile per hour, but maybe like 8, because 5.5 is like a normal run. So let's say you were going at 8 for like 5 minutes straight. It's time to cool down, yo. Time for you to go back to that 1 minute break before you start up that HIIT again. Damn, 200% banger? That's crazy. Did you get in that with Guru last week? I don't know. So we usually look at earnings too, but today we don't really have any earnings to look at either. Oh, actually, we have FuelCell. Let's take a look at that. So FuelCell had earnings today. It wasn't doing so great. Yeah. Yeah, we have some earnings we have some people from the YouTube side as well. So let's see. FuelCell earnings per share was -7 cents as opposed to -4 cents. Sales is 13.9 mil as opposed to 21 mil. Whoa, huge miss. It says this is a 12.5% increase compared to losses of last year and 18% decrease compared to sales of last year. Wait, that doesn't sound right. Oh wait, it is. Hey, what's up? What's going on, you guys? Sure, I can look at Stitch Fix for you guys. I got you. Give me a second. Let me check out this FuelCell report real quick. Service revenue, service agreements, and license revenue decreased a lot. Wow. Still burning through a lot of cash. Did this some offering before? And they're investing more in expanding in R&D too. So they're just burning cash non-stop, but they don't have any cash coming in. Let's see. A year ago, the company was trading around $10. Can you imagine people that bought it around $20 plus? Ouch. Probably the biggest scam ever. 600% at some point. All right, let's take a look at Stitch Fix. I want to get Stitch Fix for $15 calls. Wait, Stitch Fix is at $19 right now. I think if we recover, we can make a recovery to 21 to 21 or $26. However, it's looking a little bit weak today. This would be the area it needs to hold the $19 area for it to go back higher. So ideally, you're looking for that move back here to the purple line, which is the 21, 22. And then possible move back to that yellow line at 27s. So if you're gonna play Stitch Fix, make sure you go like a month out, because it's been a pretty slow mover and it could take a while for that move to happen. WPC. What is this company? WPC. Never seen about this company. Oh, it's REIT. I mean, ideal entry would be around here. Before that, if you're looking for a good pullback, that's ideal entry. Point of control. So this is at $80.58. And maybe even $81, honestly. So a little bit higher than your target there. Yeah, we're streaming across multiple platforms right now, on Facebook and YouTube and Tesla. Oh, that's a good question, Trouster. So me personally, I always look at the futures when I'm charting the index. I think it does make a big difference when you're looking at futures versus looking at the like non-futures of the indexes. Like for example, if you look at SPY, it's already at the top of the range on the. It's getting to the top of the range on the 1-day chart. No crossover yet. If you look at the futures, sometimes it's a little bit ahead of SPY. Well, especially if you look at half-day charts, a little bit more ahead. So if you look at SPY, we're finally looking like we're getting to the top of the overbought area in the S&P 500. But if you look at the futures, it's saying that we're already at the oversold area. So that could mean one of two things. It could be it could mean that this is where it's starting to get weaker when it's oversold, but it also mean that it's a lot of exhaling that has happened overnight, but you just didn't see it in the regular ticker. What's up, Polo Panda? How you doing? Even with a huge drop, end of the day, it was still way above support, looking pretty good. We're talking about SPY, Omar? That's cheap. That's also probably because the chances are very low too, so that's why. But if it happens, you get rich. Polar Panda. Yeah, it's possible. It's also pretty close to that double top area range too. It's supposed to come back to pre-COVID levels of 88. Oh, it does look weak on the daily. It is looking a little bit weak today. On the weekly, it looks like it's just beginning to curl up. It's looking like it's just about to start this big move. But then on the daily, it's looking like it wants to pull back a little bit. But keep in mind, a lot of times the daily makes the move for the weekly, right? So if daily is starting to look weak, then it can invalidate the weekly chart as well. Like for example, if daily looks like it's about to come down, then it could potentially set up something like this, where it ran up and then came back down, right? So it could just be like up, down, and then up. So don't let weekly influence you too much. Make sure you're watching the daily. But it is hitting the resistance over here too. So could potentially be like this 2 resistance there. So we need to hit that, break down, hit that, breaking down. In order to break above or be more bullish, we need to break above this line here, which is 403-ish. So that's like another $25 move. Happy holidays. I hope that makes sense a little bit. Wait, did S&P just close another record close today? I think they said that yesterday S&P had 69 record close. It was 6969. Let's see what's going on today in the market in terms of the news and stuff. There's no news today. Oh, you're holding January calls for team? You can consider it like converting it to a spread if you're worried about data burn too. So the only news I see on SPY for today was the 8 trading themes to watch for in 2022. Here are the 8 market themes traders should look for in 2022. Number 1, diversification and defense. Investor looks to protect their portfolio against uncertain environment, may try to diversify outside the tech-heavy growth stocks that have performed so well since the early 2020 crash. US stock weakness. US stocks have significantly outperformed international stocks in recent years, but Morgan Stanley chief cross-asset strategies Andrew Sheets recently said there's a chance the S&P 500 could finish 2022 lower for the year and underperform international markets. Interesting. Europe and Japan leadership. Sheets said that stocks in Europe and Japan are more reasonably valued than the US stocks, and lower inflation levels may allow their central bank to be more patient in post COVID-19 pandemic tightening. Our combined earnings and valuation assumptions suggest that European stocks can deliver an 8% return and double-digit total returns, says the Morgan Stanley chief European equity strategist. A rise in interest rate in the past 6 months, the Federal Reserve had gone expecting no interest rate hike to expecting 3. The bond market is already pricing in a greater than 55% chance the first interest rate will happen in March 2022. Stocks and assets that benefit from rising interest rates, including banks and insurance stocks, could outperform, while growth stocks must borrow money to grow coil struggle. Value investing. Value stocks have narrowly outperformed growth stocks in the closing month of 2021 and have mostly kept pace with growth stocks throughout most of the year. E-commerce growth. Online sales accounts for just 4.2% of total US sales in the first quarter of 2010, but that percentage had jumped to 13% as the third quarter of 2021. The pandemic has increased, and leaders such as Amazon and JD and other stocks that derive significant value from online sales may continue to outperform. Don't forget about Wish.com, boys. Wish.com, $3, buy the dip. Gotta shoot a message to these Morgan Stanley boys. Anybody back holding the Wish.com with us? Stock selections. The higher stock valuation gets, the more difficult bull market upside may be. The S&P 500 earnings multiple is currently at 30, nearly double its long-term average of 15.9. In a pricey market, investor may not be able to rely on a strong return from the index funds, and stock selection may become more important. Oh snap! They say the last trading theme to watch for in 2022 is fundamental matters. Oh boy. Meme stocks dominated the headline in 2021, but the more global economic environment normalizes in 2022, the fewer excuses struggling companies may have to justify their horrible business fundamentals. As a result, story stocks like AMC Holdings and GameStop may continue to revert back toward their historical fundamental valuations in 2022. I would say that we're moving in the direction of a more fundamentally oriented market, but we aren't necessarily there yet. Editor and research analyst at Empire Financial Research recently said. I agree with that. I think that's pretty true. There's a lot of stocks that we have gone like a move toward a fundamental perspective. FuelCell was just a company that we're just looking at in terms of earnings today, and they have came back down a lot. from this ridiculous run at $30, even at $12. A year ago the company was trading on 250. They haven't been doing that well. They haven't been increasing any money or anything. Like historically, this company has always been trading at really, really low levels. It's been burning money nonstop. It's been blessing just to survive for so long. So coming back to $5 a reasonable level, like on a fundamental perspective, because look at them. They're like, where would you expect them to be? A company that isn't making money, right? And then you have like other stuff, like I don't know, Ford is running a little bit crazy right now. So things like this could potentially come back down to valuation too. There's a lot of the stuff that just ran too crazy, and they could potentially come back down a lot. And a lot of the meme stocks that we have, like Wish.com, they've also been losing a lot of money. So that's also could potentially come back down a lot too. Oh, they had a news a while ago. The Robinhood Relief Fund. Yo, did you guys know about this? So apparently December 16th, Wish.com collaborates with NASDAQ to launch a popped-up vending machine in Times Square with 22 must-have items for 2022. Whoa. The vending machine will include tech essentials such as motion sensor, night lights, portable power banks, LED light-up beanies. "100% of the sales from the vending machine will be donated to the Robinhood Relief Fund, New York's largest poverty-fighting organization." That's pretty cool. I wonder if this is still there. Let's see what Wall Street Bet is looking at today. Time Magazine has announced their latest annual superlative Insight Trader of the Year. Time Magazine, Nancy. Yo, what is this? Oh, there's an ad. One of us. One of us. At the start of the year, my goal was to make $250,000 day trading. With about 10 days left, I only need to make 5 million more. Sounds about right. Oh snap, this kid is crazy, yo. That kid had fun. He's about to bust his head, but he had fun. I would love to be here. Damn, then he ran into somebody's butt too. My stock over the holidays. It's a process. Candle drops panic, calm panic. Samsung. Yeah, we looked at Biogen earlier. It was a good setup and had a big move. $42 billion. I don't think Samsung can buy them, man. I don't know. It doesn't really make sense. This reminds me of that one time when they were talking about how like PayPal was gonna buy Pinterest. That deal also didn't make sense either. So if Samsung is gonna buy them at a deal worth more than $42 billion, we would look at the market cap of this company, right? Um, so right now market cap is at 34, enterprise value is at 39. If Samsung is gonna buy them at 42, the stock would potentially be value at, so let's see, 42 billion. All right, that's the billions, right? 42 billions. Market float is at 130, 147 million. So that would have put the stock at $322.71. If Samsung does end up buying them at the $42 billion valuation, 322 will be the price is worth. In case we're speculating that. It's worth a lotto actually if it does happen. If they do confirm it, that strike would pay out really well. Albert Einstein of the stock market. Day trading strat that hasn't failed me once. I take 10,000, put it on any stock under $5 that I believe will rise 1%. I put a limit sell for $5 calls, 1% above the current price. Make the easiest $100 effort. I do this multiple times a day, and I'm thinking of quitting my day job because I'm making more money in stocks lately. I know it's somewhat risky putting 10K on the line, but when the spread is that small to my sell, it's worth it. That's not my only trading strategy, just the most effective when making my week worth of pay in one day. Yeah, you could do 320 calls. Let me see. What are the calls worth right now? I mean, 320 is the max calls. 320 call is worth 322. Probably, actually, you probably don't even want to do 320 calls because if the stock is valued at 320, right? It shouldn't be worth more than much. Probably want to go, if you're gonna do it, probably want to do a 310 calls. So that's how much you could potentially make if it moves to that range. You would potentially make another $10 minimum if it takes a long time for that move to happen. Alternatively, you can also, if you don't have the funds for a 310 call, you can always do 300 to 310 should be pretty cheap. So you're buying the 310. I mean, you're selling the 310, and you're buying the 300. And if it goes to 320, this is how much you could potentially make. Yeah, debit spreads. Because if the valuation is at 320, then it's bound to go above 310, right? So that's 2 weeks to play it, but with debit spreads, you can also go as far as you want. You can go as far as April, you can go as far as the end of the you can go as far as January 2023, you can go as far as July. Because honestly, if the deal were to happen, it would take a long time for the deal to happen too. So the deal would probably take anywhere from half a year to 1 year. I've seen a lot of these merger deals go through, and when they do go through, it takes quite a long time. So that's the good thing about debit spreads, where it gives you enough time so you can pick July's. It would cost 240, and you could potentially make 100 something percent if it goes in your direction. It's not a bad deal. It's worth a shot, I think. But you only buy this far if you think that it's gonna make that move. If you're just looking at an upside move, you can also just do 260 and 270 for a little bit more money. But you won't make as much profit as this lotto play over here. No problem, man. I gotcha. Have you ever heard a crackhead say, "I have no money, I'm not going to smoke today"? No, they always find a way. Are you gonna let a crackhead out hustle you today? Facts. Well, I mean, for the longer time frame you buy out, the more it's gonna cost, right? So let's say if you buy the 300 and 310, you go out to the longer time frame, it's gonna cost more. You're buying the $300 cost, but you're selling $310 cost. So you're essentially setting up a lotto where you make the money between the difference of 300 and 310. So if it goes to 310, um, you're guaranteed to make $10. So you're paying the difference between that. But after 310, you won't really make much more money. Not necessarily. It depends on what the investor thinks and how much value they think that the company adds to Samsung. Because if investors think that this is a bad deal for Samsung, then they might sell off the Samsung stock, and you know it might be a bad reaction. Damn, I love it. These guys keep bringing hope to the short squeeze. So they're saying that there's a massive catalyst coming for the short squeeze in AMC and GameStop, and here's why. The catalyst. Massive drops in different stocks happened when media started hyping and spreading fear about the new COVID variant. Omicron, big and small players started to short certain already heavily shorted stocks even more. Their thinking is that this variant most likely caused further lockdowns and possibly be the nail in the coffin for some of the companies that are most affected by the pandemic. They're dead wrong. Omicron is the end of the pandemic. It's natural vaccine for COVID and will be the catalyst for the multiple massive short squeeze. Let me present the data and explain. The Omicron variant, extremely contagious, even for vaccinated and boosted people, spreading like wildfire. Bad, right? Not good. End of the pandemic, good. It replaces the deadly variant. End of pandemic. By 1920, the virus that caused the pandemic became much less deadly and caused only ordinary seasonal flus. And guess what? Even the timing is similar, roughly 2 years. Huh. So it's talking about the Spanish flu. Didn't the stock market crash in the 1920s? Damn. I don't know any ticker that goes that far. So apparently the market crashed in 18, crashed again in 1922, and then it started the boom, the roaring 20s. Yeah, so I'm not sure what this guy is talking about. So does that mean that we're not gonna have a huge run until like we get another crash at the end of 2022? If history was to repeat itself, will we get another crash at the end of 2022? And then after that crash, we would have the roaring 20s or the roaring late 20s, and then from 1922 to like I mean, from 2022 to like 2030s, we'll have this huge omega run before another crash. If history were to repeat itself from a century ago, this is actually an interesting theory to look at, honestly, because the Spanish flu was a huge thing back in the day. I gotta look more into this. This is quite interesting. I mean, obviously, this guy's just talking about, he's just trying to fit it in his narrative, right? But it's interesting perspective, though. What the hell? This is the craziest thing I ever read. I didn't even know half of these. So they said that there's possible speculation that um, the Spanish flu at that time could have also come from northern China. Because apparently they said there was evidence that respiratory illness has struck northern China, where laborers came from in November 1917, and was identified later by Chinese health officials as identical to the Spanish flu. However, no tissue samples have survived for modern comparison. Nonetheless, there were some reports, of the respiratory illness on parts of the path the laborers took to get to Europe, which also passed through North America. But at the same time, they say that China was also one of the few regions of the world seemingly less affected by the Spanish flu pandemic as well. And then there was another report that says in 2016, they found that there was no evidence, but instead that they found that the virus was circulation in Europe before the pandemic. Honestly, if you think about it, this is kind of like the same. This is pretty similar, um, because the Spanish flu was also, it was also pretty similar to COVID. It's both like respiratory disease. It lasted for about 2 years. A lot of people got infected across the world. They started wearing masks. They said it was super deadly and dangerous back in the day. But I mean, if you think about it, I'm sure later on people will say the same thing about COVID. They'll be like, "Oh my God, this forsaken disease, it wiped so many people." People would talk about stories of how their relatives pass away from it. But honestly, it's not even that bad if you think about it compared to now. This is in the US, about 28 of the population of 105 million became infected. 500 to 850,000 die, so only less than 1% of the population. I don't know why we always learn that it's such a bad thing, but it's actually not that bad. This guy, sometimes, man, these guys from Wall Street Bets, they bring out good points. I'm gonna try to find a documentary about this one and try to understand it a little bit more. It's very interesting, actually. Maybe it'll give us a good understanding of the market and what's going to happen as well. Here's a link in case you guys want to check it out yourself. But I'm gonna end the stream here today. We'll be back here tomorrow around 4 o'clock to go over market outlook and see what else is going on. Take care and have a good night, guys. Thanks for stopping by and hanging out.